Hi guys, I hope you guys are okay. And we are now in the Northern Cape prelim paper. We're in the Northern Cape prelim paper for the year 2023, and we want to see how they asked their budget question. In the Northern Cape prelim paper, if you come with me to question number 4, you would find that they started just as the other guys started their question, that is to identify two items in the cash budget that will not appear in the projected income statement of comprehensive income. So you see that this is a very common question, and the examiner can twist it either way, or they can bring us that table whereby we have items that appear in both the cash budget as well as in the projected income statement. I've seen questions like that, items that appear but not, but the examiner can also bring items that will appear in both the cash budget as well as projected income statement. So look into that aspect as well. 4.2, this question wanted us to do the debtors collection schedule, so we're going to try and do that, and we'll see how far we can go with the debtors collection schedule. All right, so we are here. So one of the things that fascinates is that there was a missing amount in the month of October here. So you had to get that amount there. But when you come to the collection, you had 50% in the month of sale, 30% in the month following, 20% in the second month, and no bad debts are budgeted for. So the quickest way that I'll just show you is to come here and you say that 50% in the month, you're going to call this one 1, that is 2, and this is 3. All right. Then when you come here, you're looking for the month of sale. So in other words, when you have October here and here you have your October, so this would also become your 1, your 2, and your 3. All right, so when you come to November, so it becomes here 1, your 2, and then your 3. All right, so when we then come here, remember what we want is the credit sales in October. So that is unknown. All right, so you are looking for October. I'm just going to say October here. That is your October. And you know that if you're the October amount, if you had multiplied it by the 50%, multiplied by 50 over 100, and then you multiply it also by 95 over 100, it would have given you 47,025. So what we want to do now is to calculate from here back here to get this October amount. There are several ways in which one could have done this. So many ways in which one could have done this, but I'm just going to try and see if I can just do one quick way to come back to that October amount. The quickest way that I would want to show you is to take the 50, that is the 50%, say 50, multiply this by 95 over 100. Okay, let's see if we punch that on the calculator. So we are now saying that is your 50, you multiply this by 95%. So that gives you, that is 47.5. So I'll come here, my answer is 47.5%. Okay, so I'm trying to solve this part here. Okay, so 47.5%. So therefore it means if I take my 0, I multiply that by 47.5%, 47.5%, it should equal to 47,025. Okay, so when I am there now, it becomes easy for me now to get that one. I can simply now take my 47 and 25 and divide it by 0.475. Okay, so I'm just taking my 47,025, which is my amount there. Let's just punch in my 47,025. So I'm coming here to say my 47,025, then I'm just going to divide it by 0.475. Okay, and then it will give me 99,000. So that 99,000 therefore becomes my October credit sales year. So I end up here with 99,000. I know there are several ways in which you could have done that, and please practice those ways that you have always been doing to get that amount there. Okay, so let's quickly now come and complete the remaining figures. So you would understand that here in the month of October, there would not be sales here for November because we are collecting in 3 months. So that part becomes blank, as well as this part would be blank. Okay, so we come here, then we say 105 multiplied by 1. I know my 1 is 50. So in other words, I'm coming here to say it is 105,000 multiplied by 1. You see here it's 1. And my 1 is 50 over 100 multiplied by 95 over 100. And if you punch that in your calculator, you should get 49,875. 49,875. Let's come to the next one, which is 2. So I'm now taking my 99,000, which I've just calculated, and then I multiply it by 30%. Multiply by 30%. And then that would give me 29,700 over there. Then I come now to the third one. I'm taking my 93,000 there. So it's 93,000. Then I am multiplying it by number 3, which is 20% now. Multiplied by 20%. And that would give me, for the month of September, 18,600. And I'll end up with 18,600. Please remember to add this up as you get your 98,175. All right. In most cases, the examiner would want you to take this to your cash budget. So if the examiner wants you to do that, please remember to take that amount to the cash budget. All right. So we're going to quickly come now to the next part of the cash budget, which is calculating amounts A to E. A to E. Let's see if we can do a couple of those amounts and see how far we can drag it. A to E. All right. So let's start with A. A is cash sales for the month of November. Cash sales for the month of November. The examiner would have told us something already. You can see here that cash sales amounts to 40% of total sales. That means we know that total sales is equal to 100%. And cash sales is equal to 40%. This is cash. Therefore, it means my credit sales will be the difference, which is my 60%. That becomes my credit sales. All right. So here, what do we have to calculate? We're told cash sales amount to 40% of total sales. And in this question, we are required to calculate cash sales. All right. But what do we have? What do we have for the month of November? For the month of November, we have credit sales over there, which is 105. Credit sales, which is 105. But what we want is cash sales. So we have already established that our cash sales is 40. So we want 40. But what do we have? We know credit sales are 60. And here what we have is credit sales, which is 105. So it will be 40 over 60 multiplied by 105,000. That would then give us an amount of 70,000. So we end up here with 70,000. That becomes the answer to A. All right, let's quickly move on to the next one. The next one is B, commission income. Commission income. All right, so we have done one adjustment like this one before. I think it was in the Eastern Cape prelim paper. Here is commission income, and we're told commission income will increase by 7.5% from the 1st of November. So it simply means when you come to commission income, this has already increased. This is already increased. So this is 107.5% already, and what we want here is 100%. So we are coming here to say we want 100. What we have is 107.5. Then you multiply this by your 25,800. You remember we had one like this one before, and then you end up with your 24,000. All right, let me quickly move on to the next one, which is your C, interest on fixed deposit. Interest on fixed deposit. Okay, and it reads, the business invested money in a fixed deposit account on the 1st of October 2021. Interest is received monthly, calculated at 8% per annum. 30,000 of this fixed deposit matures. You remember we spoke about something like this when we were talking about our fixed assets, but here they're talking about the fixed deposit now, and you can see that 30,000 of the fixed deposit matures on the 31st of October. All right, so if we want to get this fixed deposit, there are several ways in which one would have done this. The first one is to get the fixed deposit that we had at the beginning, because interest here is at 600 rands per month. So we'll take that interest, which is your 600, and then we want to say that interest was for a month. How much would it have been if it was for the year? So we multiply this by 12. All right, so we multiply this by 12, so it's a 600 by 12, and then here you're going to get your entire interest for the entire year. If you say your 600, multiply that by 12, and then you're going to end up with your 7,200. Okay, so you end up with 7,200 here. Now, after you have your interest, you will now say the interest of 7,200 we want to get. Remember, this is equal to 8%. This is the interest which is equal to your 8%. Remember, interest is equal to 8%. But we want to know how much was the fixed deposit. So you multiply this by 100 over 8, and then you will get 90,000. Okay, then we are told that that was the fixed deposit that we had in this month, which was the month of October. However, 30,000 of that is going to mature. So you subtract your 30,000 here, and then you remain now with 60,000. That is the new fixed deposit after it has matured. Then you now say your 60,000, you multiply that by 8%, you multiply that by 1 over 12, and this will give you your 400. That becomes the new interest. The other way that you could have done this is to simply say, if we have 30,000 that is maturing, what interest is of that 30,000? What interest are we not going to get? Because 30,000 is matured. So you take your 30,000, you multiply it by 8 over 100, all right? And then you simply say multiply by 1 over 12, all right? So if you do that, you will get 200. That simply means you are no longer going to get interest of 200 because that fixed deposit is matured. Initially, in the month of October, you were getting interest of 600. You were getting interest of 600. But in the month of November, you will not get interest of 200 because the 30,000 has matured. So you subtract the 200 and then you end up with 400, which is the same as what we have over there. All right, so that is how you would have done that one as well. Okay, so I'm gonna do the next video where I will do the creditors payment schedule. That is how I'll also answer the payments to creditors. So please watch out for the next video where I do the creditors payment schedule.